everyone, this is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of January 26th, recording this on February 1st in the afternoon. Last week, we talked about the gold to silver ratio had tanked significantly, and that in some ways was signaling some form of a sharp pullback in the precious metals. We compared that to 2011 and 1980, and that exactly played out on Friday when President Trump announced the FOMC Chair pick as Kevin Warsh. He's a very well-respected Federal Reserve president. In the past, he's served in the Federal Reserve. He's extremely cautious on his interest rate decisions. He's also in many ways treated by the market as an independent chief. He's not going to be curbing to what the president says, but basically using financial data to guide the decisions of the Federal Reserve. And key is in the market's perspective, he's treated as an inflation hawk. And that means he's going to be extremely careful in curbing inflation. If he has to raise rates, he wouldn't hesitate to do that. So in many ways, that independent personality of his kept the market extremely reassured. And the dollar, which has been a currency that has tanked quite a bit, had a nice rebound. That then led to the contrarian play against the weak dollar, which was the precious metals, silver and gold. There was speculative trading, vertical moves, and that unraveling happened. And very drastically and abruptly, sharp pullbacks came in both precious metals. And that is a classic sign that the market is now feels that that uncertainty trade on the US currency was probably just went too far. And that pullback now means where would that money rotate into? So today's video, we want to really focus on cryptos, extreme fear on the cryptos, and we want to think from a contrarian perspective. No one can say for sure, but could we be setting up for a bounce in the cryptos? And we will explain why some of the chart patterns are telling us that. Also want to thank all the new subscribers to our channel. Hugely appreciate you subscribing to our channel. And the key message that I want to share is we don't provide investment advice. We are not an investment shop. We don't provide investment advice. We are not registered financial advisors. Our goal here is really to share technical analysis, share chart patterns, and we do think chart patterns are huge fun, great insights. That's why we call our channel as Chartsarefun. So that's our blog site. We do publish daily blogs along with our weekly YouTube videos. That's at Substack, chartsarefun.substack.com. Hugely appreciate you subscribing to our Substack. And as soon as the blogs get posted, we'll email it out to you. Our YouTube site is at Chartsarefun. Weekly videos get published. And again, huge thanks to those that subscribed over the last week. I know that the gold to silver video turned out to be hugely popular. That's pretty much what planned out in the market. And we really appreciate your subscription. And if you could hit the like button, we really are grateful for that. Now, going into cryptos, this is a Twitter poster on X. He has been posting a very bearish view on cryptos. And if you look at his predictions, Ethereum on the left, he's predicting would, after having broken down below that 2,800, goes down to 1,400, as in gets cut in half. He shows Bitcoin going down towards 50,000, and he shows XRP, which is an altcoin that has raised huge popularity, go down to 50 cents from his technical analysis. Now, along with that, if you look at the crypto fear and greed index, and we can see that that is also hovering near extreme fear in the 10 to 12 to 14 region is where we are. We, of course, over the last couple of months are printing higher lows, which is bullish, but look at where it peaked. December of 2024, it peaked. And if you looked at compared to a key indicator of Bitcoin to gold, that ratio also peaked in December of 2024. And from that 41, look at where it came down to. A trend line joining the previous lows of the Bitcoin to the gold ratio is that it is testing, and we feel that it is extremely ripe for a rebound, as in Bitcoin starting to outperform gold over the next few months. This is a monthly chart. Every candle is a month, and we can clearly see that MACD is oversold. We can see RSI never goes down to 30. It kind of hovers around that 35 to 40 level, and from there rebounds. And the past Couple of times the same thing has happened. RSI never came down to 30. It rebounded from the 35 to 40 level. Same thing happened in the 2022. So 2018, 2022, and now 4 years later, exactly a 4-year pattern. 2026, we are repeating a bottom in that ratio, and we expect that ratio to climb. Another key pattern we want to highlight is the Bitcoin chart itself has got a rising channel, a nice steep rising channel on the monthly chart. And if you join the highs, in this case from 48K to 109 to the 124, 126, and then the lows, we can see that that's a parallel channel. The top trend line and the bottom trend line are parallel to each other. It's testing that bottom end of the trend line. We shall see. There is extreme, negative sentiment on cryptos. There is, if you look at the X, there are posts after posts saying the sky's falling, the cryptos are going to crash. We believe that part. Look at the steepness of the drop. It's almost played out. Look at RSI beautifully at that center line test. And look at MACD has also pulled back quite a bit from an oversold level like we had seen in the 2022. So that's pretty much played out. It's too late in the game to now be bearish on Bitcoin or cryptos. If any, as a contrarian, this is the time to be moving money into cryptos. Of course, there is a possibility that maybe it goes lower, maybe it goes below 74, but look at 74. 74.4 was the low of April, 73.8 was the high in 2024. So that is a key support level that we believe should hold. This weekend on Saturday, it rebounded of 76,000. Right now, this trades 24/7. Right now, it's trading at 78,058. We believe that this trend line will hold the drop and Bitcoin will rebound from here. Two possibilities. One is the bears would say, well, if we do get a rebound, it's going to form a right shoulder of a head and shoulder top. So the head and shoulder with the neckline at 74, the left shoulder at 109, from there 74 to 126. That's the head down at 74 to a 109. So bears would say, yeah, you could have a counter trade bounce, maybe up to 109 and then a breakdown. If the bears are correct, then from 126 to 74, we're talking about 52,000. Subtract 52 from 74, we're talking about a 22,000 level, which is way lower down here in the 24 to 22 is where, if that bearish pattern happens. That said, we feel bullish that this could potentially climb up to all-time highs. We know that President Trump's administration is crypto friendly. They have been doing all kinds of support of the crypto, and potentially there is a big possibility from a diversification trade, money moving out of precious metals into crypto as the digital gold, the digital exchange, or the digital instrument of the future. Money could start rotating into it, especially how negative the sentiments are right now. So from a contrarian side, we are extremely positive and feel that this is a great time to nibble into Bitcoin, into the altcoins, and start keeping some capital dry to add if it falls further. But we believe we are very close to a bounce popping up on the cryptos. That said, now we're going to look at gold, and we see why gold has likely topped out. The reason is, look at its rising channel, a beautiful rising channel from the 2024 October or so timeframe. It exceeded that. That typically happens when tops form. It overshoots, it overshot, and then look at where it closed. Big wick, a reversal wick left on the top and the bottom. In many ways, that's a doji, and in many ways, you could also call it a spinning top. More than spinning top, it's called a shooting star kind of a candle, leaving a very long wick on the top of it, and also a shadow on the bottom. That reversal could then bring us a move down towards the bottom end of this trend line, which is near 4,000 to 4,250, around 4,100. So that pullback to 4,100 could come pretty quickly, is what we feel. And in fact, we wouldn't rule out a potential test of that rising 50 period moving average, which is at 3,600. So that's where we think gold could be headed in the next few months. So this is a weekly chart, and as we can see, that tested that top end of that trend line of that rising channel, overshot, pulled back, closed negative for the week, 2% negative for the week. But look at how far it had stretched out to 5,600 and closed near 4,800. 800 points were lost in just hours on Friday. That's how sharp that reversal was. Dollar, on the other hand, huge bearish sentiment on the dollar. Everyone's saying central banks around the world don't want to hold dollar as the reserve currency. Everyone's pulling out of the dollar, selling US treasuries, and in many ways they are kind of buying precious metals as a result. This chart of the dollar, a multi-year, this is a monthly chart. Every candle is a month of trading. We can see here a beautiful rising channel, and that's tested the top end of it around 2022 from 114 to 115, around that level. It's pulled back, and now it's bouncing. We do believe this is going to hold. There are many that are expecting this to break down. We feel this is a classic contrarian trade of 2026. When everyone is bearish on the dollar and bullish on the precious metals, we believe just the opposite. Precious metals will come down significantly in 2026 while the US dollar rallies. The US dollar rally will help the the Bitcoin as well. This could be a joint trade of the dollar and the crypto together doing well with the new Fed chief out here. There's going to be more confidence in the US markets. Cryptos are still heavily US dominated more than other international markets. So cryptos doing well will with the dollar will be a nice positive trade, and the dollar doing well means gold will. So you can classically see while the dollar is testing the bottom end of its trade on its rising channel, gold is doing just the opposite, testing and failing at the top end of its channel. So gold pulls back, dollar rallies is what our thesis is for the next several months. Now, a directly correlated asset to the dollar is emerging markets. We're going to look at the MSCI emerging market ETF called EEM. This has a beautiful cup and handle from 30 to 45. You have $15. Add to 45, that's 60. It topped out, the target was $60.48. It topped out right near there at $60.95. For the month, look at the long tail, the reversal tail. So it didn't close near the top. It came back and pulled close near 59. We think that this is a near-term top on the MSCI EM ETF, and we can expect to see a pullback as the dollar strengthens. Because again, the dollar, as it weakens, it helps emerging markets. But once the dollar starts strengthening, emerging markets don't do very well. So this EM in particular has met its target from its cup and handle. We expect it, and also overbought at RSI at 81. MACD is extremely overbought. We expect a pullback coming in emerging market. Now, some of the extremely stretched out components of the like the countries in the emerging market, one in particular is South Korea. The South Korean move has been a huge beneficiary of the AI trade. South Korea and Taiwan have heavily benefited from the AI infrastructure trade, in particular the storage and memory stocks like Micron, like the stocks related to Western Digital and Seagate. There is one of the biggest memory manufacturer in Korea, Hynix Semiconductor, and Samsung. Massive AI chips being manufactured out of Samsung. Those two are the two biggest components of the KOSPI index of South Korea. And look at the vertical climb of the EWY, which is the iShares South Korea ETF. That to me is unsustainable. Look at how extremely overbought RSI is at 84. This parabola will deflate. So moving forward, stay away from EWI, South Korea, stay away from emerging markets, stay away from precious metals. That's the message that we're sharing. Look at the Taiwan. Now, this one is a cup and handle with a little more upside. If you look at the $52 on the left brim, came down to 31, came up to 56 on the right brim, then pulled back to form a handle, and then broke out. 31 to 56 is $25 is the depth of the cup. At 25 to 56, that's 81. So it has not quite tested 81. It came within $10 of that at 71. Did close negative for the week at down 2.37%. We could see some form of a consolidation, but I expect Taiwan to have some more upside. And this in particular, the biggest play is Taiwan Semiconductor. NVIDIA's earnings is still due in February. That moment of NVIDIA's earnings is blowout. Taiwan Semiconductor directly manufactures chips for NVIDIA. That could cause upside in Taiwan, and hence there is potentially some upside in Taiwan. But Korea in particular, I would be extremely cautious investing in South Korea after that parabolic climb. Another beautiful cup and handle play that has played out from a commodity perspective. These are not AI related. One of the emerging markets is Brazil. Their iShares ETF is called EWZ. This is a beautiful cup and handle from 31 on the left brim coming down to 21 to 30 on the right brim. 21 to 30 is $9. Add to 30, 39. We came close to 39. We can see that it tested at 38.88. But potentially, if you exactly get the measured target from 31, 21.11 to 30.39, that's roughly you're talking about $9 and maybe 28 cents or so. So 9.28 added to 30.39, you're talking about $39 and then maybe 67 cents or so. So that's potentially some more upside, but it did pull back with a very bearish a wick on the candle on the weekly. This could start seeing some downside. This also has been an extremely parabolic climb in Brazil. I want to end with two of the key emerging markets, but they're more developed markets than emerging markets. They're the top second and the third economies in the world, China and India. They do have some upside left. Unlike the smaller emerging markets that have all gone parabolic, China in particular has FXI is their iShares China large cap ETF. This is a beautiful cup and handle from 36 down to 18 back to 36. 18 to 36 is a double. That's 18 add to 36 is 54. That's the upside on the FXI. How far did we go? We came up to 41 and now we are kind of trending in a flat fashion. So there is a potential possibility that China could get some form of stimulus boost. Some form of their New Year is coming up in middle of the month. They'll be closed for a week. But any kind of maybe deal making with President Trump, some form of a movement could make this quickly jump towards that like 54 level or so. So there is upside from this cup and handle target on China. So we remain bullish on China. In particular, Alibaba has more upside to above 200. So that's one of the components of the FXI that will help it move there. India has been hammered because of Adani, because of all the US kind of lawsuits against the company and all the irregular financing, irregular kind of accounting that they have, come across. This is a cup and handle pattern. This is the iShares India ETF INDA. So 55 to 47 to 56, that's a $9. Add that $9 to 56. 47. Yeah, 55 down to 47 up to 56. So 47 to 56, you're talking about $9. Add 9 to 56, 65. That's the upside on INDA. Where are we now? We're testing at the bottom end of this channel, which is a flag pattern. Basically, call it the handle pattern. So you got the cup. The depth of the cup is $9. Add to 9 to 56.65. A handle is forming. Its test is just rebounded off the bottom end of that handle. If that breakout happens over 56, we would see strong upside. We know that the deal between US and India is pending. There's been a lot of speculation. Unfortunately, India made a very big deal with Russia that ticked off President Trump. And so there has been a lot of stress and tension between India and US. But at the end, if Modi, Prime Minister Modi, and Indian Prime Minister Modi and US President Trump make a deal of some kind, this could have a massive breakout. So the two, call it Asian economies that we are very bullish on their charts is FXI for China and INDA, the MSCI India ETF. With that, to kind of sum it up, we are extremely, while there is huge bearish sentiment on X and Twitter about cryptos, we are taking a contrarian view and we're looking at the fear and greed index and we see that the fear is printing a higher low. That's bullish while the price is printing a lower low. A key thing that we're watching is the Bitcoin to the gold ratio, testing a key trend line and ready to bounce off it. That tells us that this could mean Bitcoin starting to outperform gold for the next several months. And this is a monthly chart where the ratio is right at its trend line, rising trend line. Also, look at the channel for Bitcoin and the channel pull back to the low end of the channel, about to bounce off it. Again, a perfect place to Bitcoin to find support, and bears would look for a bounce up to 109 and from there a head and shoulder breakdown all the way to 22,000. I'm bullish and we feel that likely this goes to the upper end of the channel and we break above the 126 to higher highs. And in fact, this time get even a parabolic climb like we saw in the precious metals. That's what potentially could pay out in cryptos. If any, this is a golden opportunity to buy in crypto when everyone else is saying, sell cryptos. Gold is tested its top end of its rising channel, failed there, overshot, closed with a very bearish candle. We expect it to come back to the low end of the channel, which is at 4100. But more, we expect it to break down below that channel and now even head towards the 36 or 3500 50-period moving average. The dollar, in our opinion, is also a great buying opportunity. While the entire world is bearish on the US dollar, it's testing a key multi-year rising channel. Low end of it, we believe that it's going to hold and it's going to start rallying back up towards the top and break above that 115, go a lot higher. That's why we think about the dollar. We think that if the dollar is going to strengthen, it's going to mean that the gold and precious metals will kind of weaken. That's just how they're inversely correlated. Finally, if the dollar is going to strengthen, the emerging market EM looks bearish. It has met its cup and handle pattern. So EM we would stay away from. One of the key things to worry about in the EM is the Korea in particular. That's emerging market heavily influenced by the chips, AI related chips, in particular the memory and Samsung, Hynix, and so on. This is overshot, pullback for the last week with a kind of a bearish reversal, extremely overbought RSI, expect a parabolic deflation or a deep sharp pullback in Korea. EWY is the ETF for that. Taiwan to us little more upside, but after it reaches its upside, so this is from 31 to 56, you're talking about 25 added to 56, 81, so another $10 or so from 71 to 81, the new peak around 81, and then expected to top out. So we look for this maybe around the NVIDIA earnings in February. Taiwan Semiconductor is one of the key components of the Taiwan EWT, and that could be a peak that from where we would be very careful investing in Taiwan. Along with that, we are very careful about Brazil. Brazil has a beautiful cup and handle from 21 to 30 is $9. That added up to 30 is $39. It came close to 39 at 38.88. It may go up a little more, but that bearish candle could mean that it is already going to ready for a reversal. We'd be careful in Brazil. If commodities are going to peak out with dollar strengthening, Brazil is a heavily commodity weighted index. That's what their stock exchange reflects. Commodity weakness would indicate weakness in EWZ, the Brazilian ETF. Finally, the two largest Asian economies, China and India's charts show upside, both with cup and handle patterns. The cup and handle on the FXI, the China's large cap ETF, points us towards move closer towards 54, and the upside on the India ETF gets us towards 65. So with that, good luck investing. We'll talk to you next week. Thank you for subscribing to our channel.